Good afternoon. This is Aubrey Martin from Martin Family Real Estate Group at Keller Williams, and we are here for another part of our series, our educational series. And today we are featuring Ms. Natalie James from Academy Mortgage. Natalie, it is always a pleasure to see you. Thank you for joining us today.
You too, Aubrey. Thanks for having me. I'm excited to go over some fun stuff about credit.
Yay. So a little bit of background, Natalie and I have known each other for a long time, and I actually saw her present at a business networking meeting about 4 years ago and had not heard of her until that point, and was so wowed that I knew that this was someone that I wanted to partner with. And thus a friendship was born, and we probably do, gosh, I don't know, maybe 30 to 40 transactions together every year. Plus, she is my co-teacher when we teach our first-time homebuyers class. And so Natalie is sort of the guru of all things lending. And though she looks quite young and lovely, she's actually been in lending for a very long time. So Natalie, do you want to speak to sort of your background and your company a little bit?
Yeah, so thanks for bringing up the demystifying class. So back when Aubrey birthed the idea about having the class, it was called Demystifying the Home Buying Process. And so today I'm calling mine Demystifying the Credit Myths. I am a senior loan officer at Academy Mortgage, and Academy is a national lending institution, but we are local here to the Pacific Northwest in our region. My office is in Portland, and I lend in Oregon and Washington. I lend on houses, condominiums, manufactured homes, all the normal, FHA, conventional, USDA, VA. And I've been doing it now for almost 15 years. I was a real estate agent first back in my past life, and that was really fun. But I just really enjoy collaborating with people like yourself and educating and empowering those that are wondering, can I buy, even if they've bought before, as we know, if they've bought before and they're trying to buy again. One of the big things that comes up is credit. It seems to be a big fear factor. So,
and I'd like to talk about that a little bit too, because I think that, the process, the way that it should work really is that people go see a lender first to talk about this piece of it so that they can figure out what they qualify for, have a roadmap, and then they come and talk to the real estate agent. But oftentimes people like to shop first before they know what they qualify for. So I end up being kind of their first stop on that roadmap. And so one of the reasons why I send them to you is because one of the biggest questions kind of revolves around this piece of, what do I do if I'm afraid that my credit isn't good enough to buy a home? And that's when I just say, do not pass go, do not collect $200. You need to go talk to Natalie immediately. And the one thing I also do love about Natalie as well, just as, of course, the service and all the good things with coming with a local lender, but that Natalie is a broker, right? And so, you are someone who doesn't just have one program. Like if you worked at Bank of America, you have Bank of America programs, but you actually have access to all sorts of programs so that it really helps people with credit scores that may be a little bit lower qualify for things that they may not be able to qualify for example, if they just went to their credit union.
Exactly. Yeah, it does come into play. We used it quite a few times during the pandemic. Together. The reality is, when you were saying that buyers will come to you and they outwardly will say, I'm afraid of my credit. I'm not sure about my credit, because it is this convoluted equation to most people. A lot of people don't even know what is credit? Where did it come from? And we talk about FICO, right? And back in the 50s, it was actually an engineer and a mathematician, Bill Fair and Earl Isaac, that started a business to collaborate and talk about, hey, have you been lent to before? Did you pay it back? Did you pay it back all the way? Did you pay it back on time, right? And they wanted to be an institution for everybody. So that's how you get the Fair, Isaac and Company, FICO.
This is what I love about these interviews that I do. I literally learn something new every time. I did not know that. I never knew
It's
that.
done. Yep. Back in the 50s. Well, forward to the 80s and 90s when we really started using the scores and the bureaus. And there's, the scores from 300 to 850. And man, I don't blame people for not knowing how to understand it all, because there's so many things that come into play. Your payment history, your amounts owed, your types of credit history, your types of credit used, how many inquiries have you had? They really have this, it's a convoluted piece of the puzzle that they can't put together, and everybody's different. Every single person. And so that first myth that comes to is that people can think that they can fix their credit on their own before all of it. And I highly advise to not try to do that. So let me pull your credit. Your credit will need to be pulled to be looked at and helped, but it's different for everybody. You cannot know if paying off debt or paying off a car, or there's just no way to know. There's no way to really know your score. You and I always joke about this because it's happened so many times with people, as you may think your score is one thing and it's not. It's much better or sometimes much worse than what you think it is, but there's 3 bureaus and they fluctuate. And so, we never know who's going to be the mid score. Is it Experian? Is it Equifax or TransUnion? And is it right after you pay all your bills, or is it when you just bought a car or when you just paid one off? So I need to view into all 3 bureaus to really help see where the score is, understand where the score is, and then help if needed.
Sometimes we talk about that because people think that they have Credit Karma or some other sort of consumer app, and they think, well, I know what my credit score is, but that's not actually reality. That's actually a lot of algorithm based. And so if people think that, that's why people don't actually know their credit score often, right? And so the credit score can often be very, very different than what they think it is because of the bureaus, right?
Or they'll get a view into one of their scores when there actually is 3 and the mid score is used. So the one that they're seeing may be Experian through their credit card that's, reports one score a month for free for them. And that might be in the mid 600s. When I pull credit and TransUnion and Equifax are up in the 740s, we ditch that lower score anyway. So there's just no real way to know until that consultation's had here at the bank.
So where do we go? So if people are going to contact you and they say, Natalie, we're interested in buying a house, we're not sure about our credit, what happens next? Where do you take them? What's the first step?
I talk to them about the trifecta, the income, assets, and credit part. And, we want to know that even if you had perfect credit, do you have the income and assets to do your goal, to buy that house, to buy the condo, get where we want home ownership in general. But then we literally just pull credit and we look deeply into if it needs help. We will use a simulator that I have through the credit bureaus, our vendor, that will say, all right, here's how we can help Experian get to the score that we need for the program that we want to get into. The fun thing about that one is that I never know what it's going to say. So I did have one client that needed to put $18 on a credit card to get into the score needed to buy her home. And she's a homeowner today. So she went to the store. It was a store credit card, a certain store, and used it and got me a new statement, and we popped her score up and she went out shopping. So there's just no way to know if that's right for her. That's not right for me. I have a client right now, we'll call them Jack and Jill. And Jack is on one of Jill's cards as an authorized user. And getting off of that card as an authorized user is popping him up close to 60 points.
Wow.
Yes. So, and that may not be the same for Jill, right? She has her own profile. So putting in that simulator is not only super duper cool, but really gives us a map to what can we do, how fast will it work, and if we need it to work fast, I can push it through on what's called a rapid rescore to make it happen fast. So we can get out in the market and go do the fun things with you that I always tease is go find those fun homes with the, gas fireplaces and the Tudor style and the backyard.
Well, and I think the piece of this too is that when you talk about not wanting to do these things, on their own, it's because oftentimes people really think that if they pay something off completely, they pay off a credit card completely, close the account, that's going to raise their credit score. And what we caution them, and I've actually done this myself before I knew about all the credit piece, because it is complicated, is closing a credit card literally tanked my score, tanked it. So the credit simulator is so important because it will literally tell you how much and what and when to pay something and what that will do to the credit score as a result. And that's a free service I know that you offer to your clients who are interested in buying a house.
Yep. So having gone through 2008 in this industry, crawling out of that together as a whole in lending and real estate and all through appraisals, HVCC, all through those years, we realized everybody's credit, it seemed like everybody's credit for years had a lot of hair on it. So I decided that this would be something that I offered to be able to get back into homeownership if you had a hard time the first time was really my main objective. And then it really came into like first time home buyers and credit boosting, credit building. That's really fun too, is that, you may not have bad credit, but if you just don't have any credit. So that brings up the second myth of I should pay everything off before I even make a move. I just want to get everything paid off. And it's just not true. Honestly, and you can speak to this too, right now in this market, cash is king. Okay. So we do not want you spending money until we tell you to. If it's needed for the credit repair, no need to pay off that car that you think that you should because it's almost paid off, or you think you have too many student loans so you want to get them paid down, or just pay off my credit cards so that I it'll boost my score. I know it if I do. And that's just not true either. Sometimes paying off a credit card does nothing. Oftentimes paying off a collection will hurt your score. Oftentimes we don't need you to pay off the collection to get the mortgage.
Well, and you call that awakening the beast.
Yes, we say, let sleeping dogs lie.
Mm-hmm.
Oftentimes I will say, no need, if we can tackle something a certain way, get on a payment plan. We don't want you spending thousands of dollars that can be really used right now in strengthening your down payment, or if we can use that money to bolster your score and get into a better program so your offer is best and highest in this market. So don't pay off things thinking that that's the first quick route. There's a method to the madness.
Yeah, for sure. And I do think that is something I actually hear probably about 90% of the time from new home buyers. They're like, well, we can get ready. We need to pay some stuff down. And I'm like, slow your roll. You got to go talk to Natalie first. Let her pull the credit. Like let her work the magic with the credit simulator, because this way you are not spending money that you do not need to spend. You do not need to spend stuff. And as Natalie said, like you don't want to be spending money if you can use that for appraisal gaps, for down payments, for whatever, right? And sometimes it is just an $18 payment on a card.
Right. It can be pretty simple of calling the person that you've been on their authorized user on their card for all these years, and you just tell them, get me off of that card, please, quickly, and pops you right back up. So, and sometimes it's not as easy. Sometimes we have to spend some time, but you and I have worked with clients well over a year and a half of credit repair and savings plans to get them where they need to be. But that's the beauty of just calling in, because as we all know, before we bought our first house, it's a dream until it becomes a reality. But you have to start somewhere. You have to call in, get over that hump. It's no pressure. It's actually fun for us to work through all those pieces of the puzzle, and then victory day, key day.
Well, just to see your credit rise, right?
Yeah.
Like it's really, it's very empowering. And it's a very proud moment, right? Because that's working hard to get you towards your goal, but having good credit history, whether for a house or anything else, really, it's something that people feel good about.
Yep. It's fun. It really is. And, you know, I want to kind of circle back to just to hit my other point on the myths is people think their credit is bad and it knocks them out of buying a house altogether. And that's just not true. You can have bad credit or, unpolished credit and still get into a home. We just talk about what that looks like. The realities are if we have life events, right? We file for bankruptcy sometimes, or there's foreclosures that happen, or auto repossessions. Their life events occur to people, real people, all the time. We can buy after a bankruptcy, depending on what chapter, sometimes just a year out. It's called a seasoning period. Or if you had a foreclosure more than 3 years ago, we can buy. You don't have to wait the 7 years that it roams around. That we have credit scores, we can go down to 580. Mind you, it starts to get ideal for you and your rate and your fees if we can get that credit score up higher. But this market is moving forward without you. So we pull credit and it is what it is, and it may need some work, but it's so far out that you qualify now to get into a home. Then we use what we can and we get into the home, and then we fix credit during that. And we talk a little bit later about new credit in 2 years from now, refinancing, right? So that's one thing I don't want people to be fearful of, is that they have bad credit so they can't buy at all.
Because, and this is something we talk about a lot, in Portland Metro, we're up about 17% right now over where we were at this time last year with appreciation. So if you can get into a house, you should, because a year from now, what happens is you may have a better credit score, but now that same house that was 500,000, maybe 600,000 to start, right? Just based on just appreciation. And so all of that good stuff that you've done so that you can get a better credit score, so that you can have a lower rate, is now sort of a wash, because you really can't get into the market because you're just sort of priced out. And so this is what a lot of people do, is they get in with the credit that they have and then they just refinance it, because that is one way in which appreciation is very helpful, is that appreciation can really help you do a refinance much sooner than it used to be.
Right. Even if it's years out, rates are so attractive right now. Rates are so low, even with some of those lower credit scores, that you may not even need to refinance. The rates are just at an all-time low. So it's not terrible to just try and just see with a pre-approval consultation, where am I? Can I buy right now? I've got the income and I've got the assets. If your credit just happens to be barely good enough, sometimes people just take the leap right off the bat.
And so once they have gotten the credit piece of it with you, and then you talk about income and assets as well, then they go into pre-approval status, right? You work on their pre-approval, which is different from pre-qualification. And I'm wondering if you can just tell me what the difference is between the two. And I will put a little asterisk to say, this is why I use local lenders, because if you have a pre-approval from a big national online lender with who we've never met and never had a conversation, these are not always legitimate. So
Right.
can you just speak to that a little bit as well?
Yeah. So a pre-approval, what we do, what I was taught to do, thank goodness, and what a local lender partner will do with you and for you and your clients, is a full scrub audit of that trifecta, the income, assets, and credit. And it's called pre-approval because we don't have the fourth piece, which is the collateral, the house, the condo, the manufactured home. So it's still just pre-approval. But all of those three things are fully understood and ran through an underwriting system that says, yes, all documents are on board. Client understands the investment that they're getting into, the product, the program, the why, the how, the highest and best for them and their needs. A pre-qualification would be a phone call into, if someone called me and wanted to pre-qual, they would say they have a job and that they have $60,000 in the bank. And last time they checked, they had a good credit score. And, you know, the mathematics of it might say that they could afford somewhere around 550. That's a pre-qualification. I don't issue them because they are not safe. They're not to go out and buy with. They're what would I qualify for? You know, it's like, I guess, if anybody out there is on dating apps, you know, the profile, and they qualify, but then you go and meet them and you're like, never mind.
No, I'll pass, thanks.
Doesn't work.
Nope.
So it's a higher vetting. The pre-approvals that we give are vetted to know that you can literally walk into said dream home, make the offer, and obtaining the home actually makes the full approval so that they can get their keys with you.
Which is why the credit piece of it is so crucial, because you really don't know what you qualify for unless the credit is run. And I know that this is sort of a hang up for people. They don't want their credit run. But the truth is, we can't help you figure out what the roadmap is if we don't have all of those questions answered. So, yeah.
People are hesitant to pull it, you know, but you're flying blind. And you and I giggle about this sometimes because it happens so often where I pull it and it's fine.
Right.
People are scared to death and we pull credit and it's sitting pretty. They just can't believe it, you know? And I'm no Pollyanna. Sometimes we pull credit and they think that it's wonderful and it really isn't. But it happens quite often that they're hesitant, they're afraid, is it going to tank my credit to even look at it? It's not. But until we do, it is literally, you know, it's not worth even trying to figure out what would help, because you've got to view it to help it.
Well, and I'll end this by saying that I think that opening yourself up to someone else and trusting them with your financial information, trusting them for their advice to help your credit, it feels nerve-wracking a little bit, right? It feels awkward. You and I have both been on the side of the buying side as well, just as consumers ourselves. Yep. And it can be a very kind of scary place to come from, to open yourself up and trust someone to help you. But Natalie is that person, because if you feel fearful or nervous or judged, you know, Natalie is your gal, because she, honestly, like, just there to help, hand-holding 101, been there, done that, got the t-shirt, all of the things. I appreciate our partnership. I appreciate our friendship, and I appreciate you being here as well.
The same, right back at you. I do love that we've walked so many clients through the process together with that same servant heart, wanting to get them to where they need to be, where they want to be. And if it's months out, if it's right then and there, great. If it's a year out, you know, we've done it with so many clients now that I think that we know, love, and trust each other enough when we get to the who and the how and the when. So it's been a great ride. Let's get some more going.
So thank you so much for joining. Natalie's information is here on the screen. Please reach out to her first and foremost, and then she'll send you over to me. This is Aubrey from Martin Family Real Estate Group. Thank you so much for watching, and we will see you next time.